Hello everyone and welcome to the lesson. We are going to answer the last question that was tested in August 2022, meetings, compliance and administration. Question 5A reads, discuss 3 legally permitted uses of the share premium on issued shares, 3 marks. Legally permitted uses of share premium. Legally permitted uses of share premium on issued shares include: number 1, writing off capital losses. The second use is issuing bonus shares. And lastly, paying up unissued shares. Those are 3 uses of share premium on issued shares. 3 uses. Uses of share premium. Number 1, I've said writing off capital losses. Paying up unissued shares. Writing off capital losses is the first use of the share premium. And candidates companies can use the share premium to write off any accumulated capital losses. And that helps in reducing the company's accumulated losses and improves its financial position. The second use is issuing bonus shares. Share premium can be utilized to issue bonus shares to existing shareholders. And candidates bonus shares, we all know, are additional shares given to shareholders without requiring them to make additional payments. And the share premium can be used to fund the issuance of bonus shares, rewarding existing shareholders and increasing the company's share capital. The third use is paying up unissued shares. If a company has unissued shares, the share premium can be used to pay up the value of these shares. And that will help in increasing the company's share capital without requiring additional funds from the shareholders. So these are 3 uses of the share premium. Number 1, writing off capital losses. Number 2, issuing bonus shares. Number 3, paying up unissued shares. 3 marks. Part B of this question reads, examine 5 shares payment method. 5 shares payment method. B, 5 shares payment method. 5 shares payment method. 1 is cash payment. Cash payment. Cash payment. Shareholders can pay for their shares in cash, transferring the agreed upon amount to the company's designated bank account. And that's the most common method of payment. Check payment. Check payment. Check payment. Shareholders can make payment for their shares by issuing a check in favor of the company, and the check is then deposited by the company into the bank account. Bank transfer. Bank transfer. Bank transfer. Shareholders can transfer funds directly from their bank accounts to the company's bank account using electronic bank transfer methods such as online banking or even wire transfer. Installment payment. Installment payments. In some cases, candidates companies allow shareholders to pay for their shares in installments, and this involves making partial payments over a specified period of time until the full amount is paid. 5. Non-cash consideration. Non-cash consideration. Instead of cash, shareholders may pay for their shares through non-cash consideration such as assets or property or even services. And such method is commonly used in cases where the company allows payment through combination of cash and non-cash consideration. So these are some of the methods that can be used to pay for shares. 5 share payment methods, 5 marks. Non-cash consideration, installment payment, bank transfer, check payment, cash payment, 5 marks. Part C, describe 4 types of dividends that could be issued by a company. Types of dividends. Types of dividends. Types of dividends. The first type of dividend is the cash dividend. Cash dividend. Cash dividend. Cash dividend. This is the most common type of dividend where the company distributes cash to its shareholders as a return on the investment. Right? The shareholders are paid in cash. And the cash is paid normally out of the company's profits. Cash dividend. 2, stock dividend. Stock dividend. Now, in a stock dividend, the company issues additional shares. All right? These additional shares to the shareholders instead of distributing cash. The shareholders receive additional shares in proportion to their existing shareholdings. 3, there is what we call scrip dividend. Scrip dividend. Now, scrip dividend is similar to a stock dividend where the company issues additional shares to shareholders. However, in a scrip dividend, the company provides shareholders with the option to choose between receiving additional shares or cash. All right? The company provides shareholders with the option to choose between receiving shares or cash. So there is a mix there. Scrip, either cash or the shares. Scrip dividend. 4, property dividend. Property dividend. Now, instead of cash or shares, a company may distribute assets or property to its shareholders as a dividend, and that may include transferring ownership of assets such as real estate, intellectual property, or even investments to the shareholders. Property dividends. Describe 4 types of dividends that could be used by a company. 1 is cash dividend. 2, stock dividend. 3, scrip dividend. 4, property dividend. 4 marks. That is part C. Part D reads, evaluate 8 benefits to attendees of holding meetings virtually. 8 benefits to attendees. 8 benefits to attendees. The question is specific to attendees. D. 8 benefits to attendees. Attendees are those who attend, the participants. what are the benefits to the participants for holding meetings on digital platforms, for holding meetings online. One obvious benefit is convenience. Convenience. Virtual meetings allow attendees to participate from anywhere as long as they have internet connection, eliminating the need for travel and saving time and expenses associated with commuting. 2, cost saving is a benefit. Virtual meetings can significantly reduce costs associated with venue rentals, catering, and even travel expenses, and that makes it more cost effective for attendees to participate in meetings. 3, flexibility. Virtual meetings offer flexibility in scheduling, allowing attendees from different time zones to participate without constraints. It enables individuals with busy schedules to join meetings at their own convenience. 4, increased participation. Virtual meetings can foster increased participation, as attendees may feel more comfortable expressing their opinions and ideas remotely. It also provides an equal platform for all participants to contribute without limitations of physical presence. Record keeping. Now, virtual meetings can be recorded and documented, providing a reliable record of discussions or decisions and even actions, and that helps in maintaining transparency and facilitates easy reference and follow-up by the attendees. Then we may have advantages like enhanced collaboration. Virtual meeting platforms often provide tools for collaboration, such as screen sharing, document sharing, and even real-time editing. The attendees can edit some of the documents in real time, and that enhances collaboration among attendees and improves the productivity of attendees. All right, do you understand? Environmental impact. Or let me discuss first of all accessibility. Virtual meetings offer accessibility to individuals with mobility challenges or geographical limitations. It allows for inclusive participation, ensuring that all stakeholders have the opportunity to engage and contribute to the meeting discussions. Number 8, enhanced learning. Virtual meetings can enhance the learning of the attendees because the attendees can watch presentations, they can ask questions, and even engage with the leaders or other attendees in real time. So these are the advantages to attendees for holding meetings virtually. Number 1 is convenience. This is related to time. then cost saving, flexibility, increased participation, record keeping, enhanced collaboration, accessibility, enhanced learning. 8, these are 8 marks. 8 marks. So that one is the end. That brings us to the end of the revision of the August 2022 paper. We've done question 1 up to question 5. Thank you for attending. God bless you. Bye-bye.